We're joined by Jeremy Thorpe, Chief Economist at PwC Australia. Jeremy, thank you for your time. Now, you've done some pretty interesting modelling on what you think the coronavirus impact could be on the Australian economy. Some pretty extraordinary figures. It could be as much as $34 billion hit to GDP.
We've modelled a scenario. This is not necessarily a prediction, but rather it's a modelling what a different environment could look like. Obviously, it's more extreme than the government is talking about now, because we're talking about it becoming a true global pandemic. And we're suggesting that over a year, global GDP could fall by $1.1 trillion US dollars and Australian GDP by $34 billion. Just to put that in context though, and I think it's important we have these types of relativities, at the height of the GFC, the global economy contracted by 5.4%. We're talking here about a 1.3% reduction. So we're not talking about GFC-like numbers.
When it comes to the state of play, though, this is going to have a huge impact on the budget. We weren't necessarily that well placed coming into this with record low interest rates. We didn't have wages growth going well, but the government has pointed to the last quarter GDP figure growth, saying that 0.5% is better than expected.
I think we, pre-Christmas, agreed with the Reserve Bank that there was a gentle turning in the economy. But even at that point, the budget was going to be challenging to get back into black, as had been forecast, but the government probably could have done it. It's going to be even more challenging now, and we see that hit on two sides. The government is going to be spending more on a stimulus package for the coronavirus. We know that they've already spent a lot more on bushfire support, but at the same time, with a slowing economy and now the coronavirus even slowing it more, there is going to be lower tax receipts by the corporate space, and income tax receipts are probably going to fall as well. So a really challenging environment. We think if our scenario plays out and it is a true global pandemic, we could be looking at, say, a $31 billion swing in the budget from a $6 billion surplus to in the order of a $25 billion deficit. That's a big shock.
Do you think that we could be staring down a recession?
Again, pre-Christmas I would have said no, we were heading in the right direction. We're not predicting a recession now, but you'd have to say it's a risk, and you certainly see that the language of government has changed, and I think everyone perceives that it can be a risk. We could have a downturn from a technical recession, though needs 2 negative quarters of growth. That still might not occur, so we shouldn't assume that is a definite in any respect.
When it comes to the modelling that you've done, do you think that the government saying its stimulus package will be in the billions, not the millions? It certainly doesn't seem like it would come anywhere near $34 billion. Do you think that would be enough?
No, so we, in our modelling, were suggesting that if it was a true pandemic, government might have to spend 1% extra than it was currently spending, and that's in the order of $6 billion. But we're not at that point yet, so that's off the cards. And I think they're talking billions for the initial package. We've always said that stimulus should be timely, targeted and temporary, and that you scale it as the problem scales. And so even say $1 billion stimulus at the first round, there's probably scope for that's going to increase if it does become a more widespread challenge.
Jeremy Thorpe, thank you for your time.
Thank you very much.